Let's get across the market open. Scott Phillips joining us from the Motley Fool. Scott, happy Friday to you, although I don't know, it's too happy if you're an investor at the moment, isn't it? You've got to look away because that selling likely to continue today.
Yeah, Andrew, g'day. It's going to be a rough old day on the market. It's been a rough week. The last month has been rough. We're hovering around correction territory, better or worse. Depends which day goes, obviously. But yeah, it's been. Well, here's the thing, right? So I am going to put a silver lining on this one. It sucks when your portfolio falls, but it also means things are cheaper than they were a month or so ago. And if you thought things were overvalued a month ago, then maybe you're not stoked about the value today. But if you're a buyer at any point in the last month, you should be pretty happy. You can buy more today. If you held companies a month ago that you thought were good value at those prices, you should be even happier today. So yes, these are the things we go through, and they do weigh on our moods, and they do weigh on our decisions. But it is important for the investor to take a step back and say, right, I'm getting the market at 10% less than I was getting it for a month ago or so. That's generally a pretty good thing. Again, if you thought it was overvalued to start with, then maybe you're saying, well, it's getting back towards fair value. But if you liked anything then, you should like it a lot more now.
Well, in fact, taking a look at a couple of stocks, and you talk about stocks on sale. Look, Brickworks has fallen precipitously just in the past week or two. It's off the back of a write-down in the US, so a downgrade there. How are you seeing that?
So, Matt, I own Brickworks. I bought some after that downgrade. To be really honest, I guess I took my book a little bit, but not deliberately. Like what I said, it's not going to move the market for Brickworks that much. This is a really high class business, mate. Not only is it the brick business in Australia and the US. Yes, there was a write down there. It's a non-cash write down. That doesn't mean there wasn't value destroyed. They paid something for those assets, so they overpaid, at least in hindsight. But if you think about the operational performance of that business over from now till kingdom come, this is likely to be I think, a temporary problem rather than a long-term one. They're not impacted by tariffs because they make all the stuff there. They make the stuff here. So they're in a pretty good position overall. The write-down's not great. There's some weather issues. Maybe there's some competition issues there. But broadly, this is a great long-term business. It also has the property portfolio. It has a cross-shareholding in Soul Patts. I own Soul Patts as well. When the shares they're off, I think 10% this week alone. When I bought them at that point, again, exactly what I said before. I liked them before. I like them a whole lot more now. Even with that downgrade, largely non-cash, as I say. The operational update largely weather related, if you believe what they say, and I do. So you just kind of get the opportunity every now and again. Yes, everyone sold. Why did they sell? Well, because of the temporary bad news. I suspect that is an overreaction. I suspect future prices will suggest that buying this week was a good idea. Again, I'm not saying everyone should do what I do just because I did it. I'm not trying to talk my book for the sake of it, but skin in the game is important, and that's one I own, one I bought more of for exactly that reason. And that's kind of what I was talking about, mate. I bought some other shares. I bought units in a couple of ETFs. I think I bought some Soul Patts. When they're down, buy them. If you like them before. So Brickworks, really well run business. Rob Milner, obviously chair of the board, very, very astute businessman, great company, very happy to own shares in.
Elsewhere, Scott, those consumer-facing stocks under considerable pressure at the moment, I guess a reflection of what we're seeing with the broader economy, all off the back of fears, of course, about this global trade war that is afoot. But, I mean, you look at both discretionary and staples under pressure. Yeah. You've got to focus there on Super Retail Group. What are you seeing?
Yeah, one I don't own, mate. But again, I'm going to be a broken record. I've talked often enough in this slot for your viewers to know I regularly talk about being. I'm always happiest being the optimist in the room of pessimists, right? When everyone's freaking out about the short term, if I have any ability at all, it's to be able to see through that, have a temperament that says, you know what, this too shall pass. If Super Retail sold off on short-term concerns, the PE was about 13-ish, I think maybe 13.5. It's just cheap, right? And when you're paying that sort of price, you don't need much growth. Is Super Retail going to grow? Yeah, pretty sure. If it doesn't grow much, it's probably fair value. If it grows a bit more than that, it's probably cheap. You're getting a really nice dividend, which is up to 5-ish%, maybe a touch below that, fully franked. It's not exactly a no-brainer, but sometimes you just get offered some of this stuff and you kind of go, well, how hard is this? What risks am I taking? A few people are going to shop at Super Cheap Auto. No. Rebel. No. BCF. No. They are great powerhouse brands. They're effectively category killers or close enough to it in their own right. They are going to have brighter futures, opening more stores, more people shopping there over time. There's a bit of cloud hanging over them with some legal cases. That'll blow over one way or the other. I don't suggest there's no merit or any merit to it, so the court can decide that. But whatever is found will be minuscule in terms of its impact, if any. Maybe there's a one-off fine, maybe there's not. But this is going to be a powerhouse business, I expect, for years to come. It's fallen for reasons that I don't think are related to the long-term future of the business. And so when you get that opportunity, you go and snap it up.
Another stock I see you're focused on is PWR, ticker code PWH, always confusing.
Yes.
This is automotive cooling systems. Look, it's been in that downtrend for the past few months. What's going on there?
Yeah. So this is a founder-run business, which I love. Keys Wheel runs the business, and PWR makes, as you say, cooling systems. Now, what they've basically done, cooling systems used to be just a fancy word for radiators, right? If you in a four-wheel driving or Formula One, you'll see PWR cooling systems in those places. They make high-performance radiators and other cooling systems effectively. That's the core business. What they're moving into, though, excuse me, is EVs, aerospace, and other kind of new business areas. And that's drained a whole lot of profit away from the company. So investors who like the previous level of profitability will say, well, hang on, what's going on? We thought this was a growth company. We thought we were going to buy it for profit. We thought profit's going to keep growing. What's actually happening is they're reinvesting for growth in those other areas, and they're getting some really good traction. So this is one, super cheap, super retail, sorry, and Brickworks, pretty boring, staid run-of-the-mill businesses. PWR is a growth business, and there is not any certainty the growth will absolutely eventuate. The investment may be in vain in those new areas. If they can, however, make those investments stick, and they're showing good progress with it, there should be really good upside from here. As I said, they're smart people, founder owners. They're not going to waste money for the sake of it. They're their own cooking. So if they do manage to get traction here, and that turns into profitable growth, which I think it will, then I think what we're going to see is the business will be much more profitable in future. I suspect over time the share price follows. I have no predictions as ever on short or medium term share price movements. But if that growth does come through, and I think it will, then it's a very, very nice place to be. It's not super cheap, no pun intended, at the current level, but it's not particularly expensive if you kind of right size it for that investment. So, look, the other thing, by the way, if the investment doesn't work, they just shut down those businesses. They reduce the cost back down, all of a sudden they're back to profit. So it's kind of heads I win, tails I don't lose much. Doesn't mean the share price can't move in the next little while in any direction, but over the long term, they have two ways to win, one more than the other. But in either case, there should be a profitable investment from here.
Scott, just to round out, given the uncertainty we're seeing at the moment, what are you actually avoiding? And are you upping your cash levels at the moment?
No, I'm not. In fact, if anything, with prices being down, I want to be spending. In fact, I'm almost always fully invested, Andrew. I don't try and time the market because the market goes up more than down, right? I think if you're going to try and time the market, you're betting against history. You're betting against the average move of the stock market. So I'm almost always completely in cash. I am completely in stocks. I am right now. I said I invested earlier in the week. I've used up my cash, so I'm fully invested. That's what I do. In terms of what I'm avoiding, I think you want to be a little bit careful of trade exposed companies, not necessarily avoiding them entirely, but just understand the portfolio mix you've got. Obviously, aluminium and steel, agriculture may well come to be an issue. Australian wine to the US might be an issue. We've already had that issue with China. Now, by the way, I own Treasury Wine Estates, right? So I'm not avoiding it, but what I am saying is think about how exposed you are across your portfolio. On one version of the future, this is the great time to buy this trade exposed stocks is already beaten down. That's absolutely possible. On the other, we've already seen tit for tat tariffs with the EU and the US. At the moment, the Australian government's playing gently and kind of hoping just to cop it sweet and minimise the damage. That may or may not change, right? So just think about what you're exposed to. We saw that with Canada, Mexico, right? Fisher and Paykel Healthcare produced outside the US, imported into the US, and when those tariffs were announced, the share price fell. Just be mindful of where you are invested, what you're invested in. We used to think about commodities, industries, currency, geographies, that sort of stuff generally. We haven't for a while. So, well, hang on, what could happen with tariffs? We probably should have, frankly. Trump had promised them during the election. He had tried the time before and kind of walked back and ended up with a free trade agreement. But this time around, he's done exactly what he said he would do, for now at least. We'll see whether that comes away with more negotiations. But look, I'm not in cash. I don't think you should be fearful. I think the long term is bright. I think we'll look back at this point and say shares are higher than this at some point in the future, almost by definition. Do they go lower first? I don't know. But do they go higher eventually? Yeah. So the bet for me is to be invested. Just think about the sources of risk. Yes, the usual ones, as I say. Think about how much debt your companies have got. Can they withstand a short-term issue? There may well be a US recession. There may well be an Australian recession to follow. Just be prepared for those eventualities. But remember, shares go up over time. So now is not the time, in my view, to be running away from the market. Be long-term, be focused, be diversified. Have a cast iron stomach, and expect some bumps. But also don't lose sight of that optimism that the future is almost certainly going to be better than the past.